So actually, Manoj, the interesting thing which is happening right now is that it's the Nifty which is not able to rally beyond the levels that we have seen over the last 15 days or 20 days. But you look at the mid cap index or the small cap index, we are seeing a lot of good performance happening. It seems to me that we are increasingly getting into a bottoms up market, a stock pickers market, rather than a macro top down kind of a trade, which was what it was post 2020 to post 2021. And I think the reason is possibly that market has gone ahead of itself in terms of you. I mean, you know that markets and earnings growth are not a straight line, or GDP growth is not a straight line. There are a lot of market always discounts it in advance. And then the best case scenario for the market is for it to be stable rather than falling, and then allow the earnings to catch up with valuation. So India is clearly one of the most expensive valued emerging market. There's no doubt on that. And even historically, we've always been overvalued, but even from an historical average overvaluation, average perspective, we are overvalued. So that means that maybe at the index level, you will not see as much gains as what you will see in some of the well-performing mid caps and small caps. And I think the way to look at it would be to look at the sectors which are doing well. You can look at travel, you can look at some specific sectors which are doing well, and then take maybe the top 2 or top 3 companies there if they happen to be mid caps. I think those kind of things I think is what is there. But of course, I have to warn that I'm just a trader and I just run a small equity trading portion, and it's not really a big. I mean, there are much bigger and better players who will give views on equity markets. But having said that, I think corporate earnings this quarter, we are kind of pleasantly surprised. At least the worst did not come through, and there is a little bit of wide outperformance beyond that. Also, the fact that the domestic macros are looking good. Also, the fact that the tariffs are likely to affect India the least. And so, of course, we are all waiting for what is the resting level of the tariff. But definitely there is the fact that US is against China is very clear. And hence, if it is against China, it will also be against the Vietnams and the other countries of the world through whom a lot of exports were getting routed. So if that is the case, then it's a safe thing to assume that India will be preferred vis-a-vis other countries. So that is also something that, a market is looking favorably. So all in all, and see, the point is domestic flows continue. It's the foreign flows which are being very ephemeral, coming in today, coming out tomorrow, going out tomorrow, and things like that. So we have to wait and watch. I suspect that second half of this financial year might be a better year for equity markets than this first half.